Hey everybody, Joshua Phillips, Churchill Mortgage here with your latest market mortgage rate update. Today is August the 16th. Boy, the year continues to go quickly. Well, let's jump into these charts as we do every week. So as we've been talking about for weeks, if not months, the core issue is, of course, inflation. And we're always looking at the data that comes out week to week, day to day. The most recent data has been really positive for inflation. The CPI, Consumer Price Index, the PPI, the Producer Price Index, both were showing declining inflation. 2.9% was the latest number we saw. So we're moving in the right direction of that 2%. And that is causing the Fed to start thinking about cutting the Fed fund rate. So, which is what we want. Now, a couple things about that. Number one, the Fed fund rate is not mortgage rates. It is something different, but it is related and generally moves the same direction. Number two, I keep hearing people say, hey, rates are going to go down September 18th. Well, that's not really the way it works. When the news comes out and there's a strong possibility, the market starts to bake that in. So we already expect the Fed to cut the Fed fund rate 1/4 to 0.5% September 18th. And that is why mortgage rates have moved down over the last few weeks. So, that's not something we're waiting for. I know my phone's going to ring off the hook when they cut the Fed fund rate, but you will know better that that's already come into play, and we'll really be looking at, what does the rest of the year look like? Are they going to cut more? So it's not really about September, it's about the future. And what's happening is inflation coming down. And then we also have that wild card called the election 2024. And I have no idea what's going to happen. Neither do you. And I have no idea what's going to be good for rates, bad for mortgage rates, etc. So let's look at a couple quick charts here. So the one chart that you would have access to is on CNBC, looking at the 10-year U.S. Treasury yield. Is very much related to mortgage rates. So we want to see the yield go down. And we can see that it has obviously gone down since it went up earlier this year. And we kind of hit the lowest level. It's so funny how these charts work. But if you look here at where we are, if I can get my mouse to cooperate here, where we are today is really about where we were in the beginning of January. So we've kind of hit that same spot, and that's good news. We're up a little bit in the Treasury yield. If you look at just the last, let's see if we can pull up a 30-day chart. 30-day chart here. If you look at a 30-day, we kind of bottomed out earlier this month. Last couple of weeks, we've come up a little bit in the 10-year yield, which means that mortgage rates have actually gone slightly up. Now let's come over here to the corresponding chart that we like to show you, which is the mortgage-backed security chart, which is actually where mortgage rates derive their value. It's from these security charts. And what I always like to say about the mortgage-backed security chart, two things. Red is bad, green is good, and the higher the security price, the better mortgage rates are doing. And a picture, of course, is worth 1,000 words here, as we see that we had this wonderful run-up. And we've had a wonderful run up in green up until a couple weeks ago. Then my market update last week, mortgage rates kind of got a little bit worse. Security prices got a little bit worse. Well, this week we're slightly better. So what you mainly want to pay attention to, the most important thing, is these moving averages. So this red line here is the 25-day moving average. That's the average of the last 25 days pricing. And we want to stay above all these moving averages, the 25, the 50, the 100, the 200. That is good news. As long as we stay above those lines, those trends, that means that we're still in a trend where we hope to see mortgage rates continue to improve. Now, things can change day to day, week to week, depending on economic data. For instance, a couple days ago, we got a retail sales, which was a strong retail sales report, and that kind of that was kind of one of the red lines there, and so things are moving obviously day to day according to the economic data, potential wars around the world, things like that. So anyway, well, hey, so this week, flat is better than rates getting worse. So let's take that. It's a flat week, and we're still above all the moving averages, which means we're still trending in the right direction. So listen, please reach out if you want to talk about your specific situation in mortgage rates. If you want to work on getting pre-approved, I'm certainly happy to help. Joshua Phillips, Churchill Mortgage. Have a great weekend. Take care.